Australians have been hit where it hurts for the 9th consecutive time.
To discuss what a 0.25% interest rate rise means for everyone from renters to businesses to homeowners, we've assembled a panel of experts. Effie Zahos, Mark Boros, Vice President of the Real Estate Institute, Leanne Pilkington, and CEO of the Tenants Union New South Wales, Leah Patterson-Ross. Good morning to you all.
G'day.
This is quite the panel, isn't it?
It is. Mark, let's start with you. I was talking with Sarah about this all morning because I'm a little bit confused about what the Reserve Bank is trying to achieve. We know they're trying to reduce inflation, but at what point do they stop the interest rate rises? Where does it become, achievable for them to start stabilising, given they want inflation at 2-3%, and it could be a couple of years before that happens?
Well, that's very interesting. That's a very interesting question. And they have never at any stage indicated where the inflection point is from where we are now, 7.8, to where they want to get to. So they haven't told us whether it should be at 5%, they'll stop, or whether it's going to be at 4.9%, they're going to stop, or whether it's 6.5%, they're going to stop. For my money, and for those people that I speak to, and I'm sure our panellists have got something to say about this, there's a lot of confusion, and to be frank with you, I think a loss of faith in the Reserve Bank.
Completely.
They got it wrong 18 months ago. I think they've got it wrong now.
Their sole job, ostensibly, is to control inflation, and they got that wrong from the start. A lot of Aussies have gone heavy into mortgages, and they're paying for it now, obviously. But I just don't know at what point and where, for an Aussie family planning their future, and we'll get on to interest rates in a second, what they should do, but how do you plan against what's going to happen in the next 2 years?
It is impossible to plan, and this is, from my point of view, I guess, this is bad policy. Because no one knows what's going on. This is the first Reserve Bank meeting for 2023. It sets the tone for 2023. They've jawboned in the statement yesterday. There's going to be more rate rises. People are going to start to panic. People will stop buying real estate. Small business owners are going to start collapsing or close up their business, and homeowners are going to stop spending. Like this is calamitous from my point of view.
And that point you mentioned there about the real estate market, Leanne, that is the problem. We've had 9 in a row now. It's already hurting mortgage repayments. Yep. What does it mean for the industry as a whole, the real estate industry?
Well, typically prices go down when interest rates go up. What we're finding at the moment, though, is the price falls have started to slow as of August of last year. So
but they were already quite high, weren't they? The price was like up 24% in New South Wales, for example.
Absolutely, and down. So they were up about 27% in New South Wales and down by just under 14%. So we're still up on pre-COVID, which is important to remember. But one of the issues we've got right now is the lack of stock on the market. So we are currently 5% down on this time last year and 15% down on the 5-year average. And so that is kind of stabilising prices to a small degree because there's just not as much around to buy, and there are still people out there buying.
Okay, so there are going to be big strains on the hip pockets of Australians who have mortgages. For those who don't, for those who are renting, we know there are like 1%, allocations of available rental properties at the moment. That's also come at a bad time for renters.
Yeah, so, that low vacancy rate, that lack of actually available and affordable properties is really causing a lot of pressure. Both people trying to find a home, but also people already in a home who don't want to raise a fuss, don't want to kind of put a target on their back that they might get pushed out back into that market. And so that low vacancy rate allows for rate rises to be passed on to leverage that shortage, and that's really making life very, very difficult for renters.
So effectively, people, no matter what they're doing, are going to be paying more for where they reside. That comes back to, let's go back to mortgage holders now with you, Effie. Refinancing home loans. Do you? I mean, if you like Mark yesterday, you said at least 2 more, and everyone's saying between 2 and 3. Deutsche Bank's saying 4. Do you go in, given that they say inflation is kind of being controlled and maybe heading down, do you go in now and lock in or at 6%, or do you take a variable and tread the light? Fantastic.
Yeah. And here's the thing, we were chatting about this before, Mark and I. Okay, the reality is a homeowner with a $500,000 mortgage is facing $12,000 more in repayments over a year. How are you going to claw this back?
Where do you find it?
Yeah, I can easily sit here and say, refinance, go from the average to the cheapest and you'll claw back $6,000. Here's the problem. The people we are speaking to now, the people I speak to as well that need to refinance, do they have the serviceability and do they have the security to refinance? So what I mean by that is that if they bought their property a year or 2 years ago, as you just explained, Property prices have fallen. Their wages haven't gone up. Will they get this loan, Mark?
Probably not.
Probably not. So this is the problem as well. You've got higher rates going up. Then you've got the issue with the banks too, cost of funding. The small lenders that have been very competitive and keeping the big guys on their toes, their cost of funding is going to go up. So you may find that the power balance swings to the big banks and a lot of mortgage owners are going to be trapped.
Can you explain that to me? Because I mean, the way the big four banks have operated, I think in the last 6 months or so, has been reprehensible.
Greedy.
I mean, it is, and the way they say they're community-minded, and then it's just basically it's profit-minded. I'm not going to take exception to it. I'm going to keep prosecuting it. So in terms of those banks, that you say they're borrowing money, all those existing loans, do they borrow the money, say, at 2%, and that goes up, the banks themselves? No. How do you explain how the banks pass it on straight away?
The bank's advantage, Karl, against non-bank lenders is that non-bank lenders go to the capital markets, like super funds, big corporations, and we raise the money through those environments, and they are marked or priced at market pricing. Big banks, though, have depositors, and you'll note today that a lot of the banks have not passed on to depositors the interest rate rise.
Right.
So there's this massive gap that's opening up between the deposit rate and what's been passed on to depositors like my dad, and every single rate rise has been passed on to borrowers. So the banks are opening up this big gap and going to make huge profits. And it also allows them, and I was talking to you earlier on, it allows the banks to offer people cash back. So basically what's happening here is depositors in Australia are funding the banks to give someone cash back to refinance with them.
Wow. That's pretty simple. See why I'm so upset about it? Just a really quick final thought from both of you.
Well, one of the challenges is, to Leo's point, we've got investors selling property because they can't afford to keep it, and that is just going to exacerbate the problem that we've got in our rental market.
Okay.
Look, fundamentally, we haven't. We're treating housing like an investment game, and rather than having the housing as the primary outcome. And investment's a means to an end. That's what we've got to switch so that we can actually focus on making sure that housing is there for people, for what the community needs.
All right, finally, Effie.
I expect banks probably to come out with some kind of package like it was in COVID. There are going to be people that may have to go interest only, extend term under financial hardship. That is going to cost people more in the long run. It's a band-aid solution, but it's something I urge people to talk to their lenders with.
We've been hearing from our viewers just how big a blow the rate hikes are having. Let's bring in Chris and Beth Gleeson from Newcastle and Alan McHutchison, the owner of Mr and Mrs Pizza in Melbourne, that you may have heard about yesterday on our program. Neil Mitchell at 3AW in Melbourne's been following his story. We'll get to him in a second, but let's start with Chris and Beth. What does this rate hike mean for you and your rather large family, my friend?
Well, we are just managing our money differently at the moment. We are doing our best to learn more about how to manage our household budget and looking to save costs where we can. We moved in, bought a house with our parents. Never thought we'd do that, but here we are, and in 2023, doing our best.
It's great to have the grandparents there, though, because they look after the kids so often when you want to go out.
It's really good. Built in.
Hey, Beth, I want to ask you, what changes are you making inside your little family unit with costs? And given the news that this might be going for some time, what are you kind of looking at to save yourself money and to make your family okay?
Yeah, I think for us, we've definitely just been eating at home more, which is something that's helped make a difference. But yeah, I think just trying to be a little bit more clever with our money. I think our generation a little bit more, we had to be a bit more savvy than maybe our parents were, like getting a bit more advice on wisdom and money hacks. So that's something that we've been doing.
OK, Chris, the other thing is, what do you do with interest rates? I think that's the quintessential question being asked at in a lot of families. At the moment, Dominic Perrottet was just talking about the family unit and family cost of living pressures. What do you do? Do you lock in now, or do you kind of wait and see where it goes with the Reserve Bank?
We locked in before we... So we locked in for about 3 years on a fixed rate, and we feel that's been a real huge advantage here.
Yeah.
An investment property of ours, not the case, and we're definitely feeling the pinch. So if there was a way that we could lock in now at that rate, I would definitely lock in at the moment because we're stuck, you know, in that space.
Look, the other thing you can do is stop having kids.
We did, yep, we definitely did.
All right, you had your own little cutbacks. Hey, all right.
Yeah, that's exactly right.
I've got you. I got you. Let's go to Alan now, if we can. Alan, a very different story for you. I read your story. Neil Mitchell actually sent me your story, which is incredibly powerful. You've been in the hospitality business for almost 30 years. Have you ever seen anything quite like this before?
Never. Like, in the entire time I've been doing this, I've never experienced, like, so many back-to-back price increases that it's out of control.
Explain that to our viewers.
Nothing before.
Take us inside that, and also not just the cost increases in the production of your pizzas, but also what a rate hike does to your business.
Well, obviously, like, families are going to feel the pinch of the rate hikes that they're paying their mortgages, so therefore they're not going out and spending money on food like they used to. People that used to come once a week are now coming once a fortnight. The once a fortnights are now coming to my business once a month. And our increases as well. Like, they look at the price of our product and go, oh, they're suddenly shocked by it, because it's not the same price as it was 2 months ago.
Okay, and the point is that even for your products that you use to make pizzas, they've gone up exponentially. Describe to everyone at home how much they've gone up, as an example, as to why you can't not pass it on to consumers.
Well, we had cheese in August go from $103 a box to $150, so that's a $47 per box price increase overnight.
Wow.
We go through about 46 12-kilo boxes a week, so that's 46 times $47. That was just bang, overnight, no warning. This week alone, and today's only Wednesday, this week alone, mushrooms have gone up $4 a box, and ham has gone up 65 cents a bag.
Jeez.
Mushrooms, I get 17 boxes a week. Ham, I get 78 bags per week. Those two numbers right there total to about $6,000 extra per year that is now coming out of my wages.
Okay, so this is the inflationary aspect of it that the Reserve Bank is trying to control, and then you're going to get doubly hit because people are going to have less money in their pockets because mortgages have gone up to spend at places like yours. So your costs are going to go up, and you're going to have less incoming, and you're going, where does that put you?
Other than, I mean, I'm already working 116, 120 hours every single week. I can't physically be here more than what I'm already here. I'm often left scratching my head. I've got 11 staff members that I've got to worry about as well. And now 2 of those 11 are getting paid more than I am on a weekly basis.
All right. Well, look, Mr. and Mrs. Pizza, the best thing people can do to help out small businesses is to try, if they have the spare money, to go and spend at places like yours. You're a hard-working Australian. We appreciate it. And to our beautiful family as well, thank you so much, Beth and Chris, for being with us. We'll let you go back at it, and good luck with everything.
Hey there, Today fans. Sarah and...
What's my name again?
Oh my goodness, Karl.
Hey, thanks for watching our YouTube channel, though. Subscribe now for more news, special reports, and amazing Aussie stories.
And Karl misbehaving,
Whoa,
of course.
That never happens.
Always happens.
What's she talking about?